watching Rogers TV Toronto. The opinions expressed in the following program are those of the participants and do not necessarily reflect those of Rogers or Rogers TV.
It's everyone's favorite time of the fiscal year, tax time. Today we answer everything you need to know about small business accounting and taxes. And welcome to Toronto Speaks Entrepreneurship, and thanks for joining us. I'm your host, Evan Kosiner, and from my experience, the biggest concern people have about starting a new company is taxes and accounting. So I've asked two experts in the field of accounting and taxes to help me answer your questions tonight and tell you everything you need to know about small business accounting. We got Jason Safar, who's a chartered accountant and partner in the tax services group at Waterhouse, and Andrew Wall, who's a certified management accountant, vice president of operations at CAforit.com, and Wave advisor at Wave Pro advisor at Wave Accounting. And if you've ever had a business, tax, or accounting question, now's that time to ask. You can reach us and our expert panel by calling 416-446-7090. You can also send us a message on Facebook at facebook.com/Toronto Speaks. You can also tweet your questions at Toronto Speaks. And we've even got a classic email. Our email address is torontospeaks@rci.rogers.com. And while you're online, I want to let you know about a little contest that we have going on this season. If you head to our website at rogerstv.com to enter, you can get a chance to win a head-to-toe business makeover courtesy of Got Style. It's valued at $1,000. It's something special for you, our Toronto Speaks Entrepreneurship viewers. Or if you know someone who's maybe around your television who needs a wardrobe makeover, you're welcome to tell them about it too. So Andrew and Jason, you guys are looking very stylish yourselves. Welcome to the show.
Thank you.
Well, thanks for having us.
So what do people need to know when they're starting their business? What's the first piece of tax advice that you can give them about setting it up and accounting? What's the first thing that you need to know about taxes and accounting?
Well, I think the first thing is look to a professional.
Yes.
A lot of times people look to these U-file softwares or solutions that they try to do themselves, and a lot of times that ends up hurting them more than it does help them. Mm-hmm. So I think speak with a professional, make sure that what you're doing is the best for you, because a good professional will actually save you money as opposed to cost you money. So that's probably the most important step that I can think of. And then, of course, making sure your organization is structured in the best possible way, whether that be a sole proprietorship or a corporation or even potentially a partnership, and figuring out what's the best structure for your organization. And then, of course, keeping your information organized. So figuring out a bookkeeping system that works for you. And there's some really great softwares and tools out there that can really help with that.
And Jason, what's the first thing that you see people screw up on when they're starting their company? What's the first mistake that people make starting their own business?
Yeah, it's a good question. I think generally people worry a little bit too much about detail as opposed to focusing on overall concept.
Yes.
What are they trying to accomplish? Don't bury yourself down in the dirt. Like, figure out what it is that you're trying to do from an overall perspective, and then, as Andrew was saying, seek some advice to help you out with the detail. Don't try and do it all.
Okay, so there's lots of titles that you get when you become an accountant. There's different types of accounting genres. Is that the
Sure.
perhaps that's
Sure.
what we'll use as a term?
Sure.
So Jason, you're a CA, and Andrew, you're a CMA. What's the difference in terms of style of accounting? What's the differences when someone's looking for an accountant that they should be aware of when choosing, do I go with a CA or do I go with a CMA?
So there's, in Canada right now, 3 types of accountants. There's chartered accountants, certified management accountants, and certified general accountants. The interesting thing is actually they're looking at a merger and amalgamation right now, and they're going to be called the chartered professional accountants. So they're actually all going to become one, and I know there's a lot of confusion out there on what the difference is. Historically, accountants have been very focused on tax, CAs and CGAs. Management accountants have been a little bit more focused on cost accounting, management, and sort of some of the more MBA sort of business modeling types of things. So helping entrepreneurs with managing their businesses beyond just the tax. So I'm a CMA, but I do work for a CA firm. So I've worked for 16 years in tax, but the CMA designation gives me more background on management accounting and understand how to manage that business, as well as doing some cost accounting to figure out how we're going to be profitable.
And from an accounting standpoint, are you able to look and see the financials of a business, and what kind of advice do you give as a CMA from that management perspective?
So a lot of times, we look beyond the tax, and I think that's a big driver that we do at our firm is we want to look at the whole picture here. We do a benchmarking analysis with every one of our clients to show them how they compare to the average and the medians. We do a high-level financial plan with every one of our clients so that we can look at where they are now, where they want to go, and how they're going to get there. And we do all of this in a whole sort of holistic viewpoint, as you said, looking at the big picture rather than just the little minor details of what you're going to save on this individual account or whatever the factor might be. Where's your business going and how are you going to get there? And we do a whole business coaching aspect that you wouldn't find at sort of a normal accounting firm.
And from a CA perspective, what are the differences there?
Yeah, I wouldn't get too caught up in the designations at the end of the day, right? Because it is really about professional advice and finding somebody you're comfortable with. But I think the look again, as Andrew was saying, is you want to take a larger view, a larger lens when you're looking at where you're trying to get. Like for instance, if you're starting up your business and really your vision is, look, I'm just incorporating, I'm going to work for myself and contract out, that's a little bit different than I've got this new cool idea and I'm going to be the next billionaire and I want to ramp this thing up and go crazy. Those are two totally different business profiles. So your whole structure and advice should be catered to that, right?
And there's a lot of tech startups there that are coming out and lots of incubators. What's something that would be different from a tax business that'd be different for a tech startup instead of something that would be more traditional, like later on in the show we're featuring a great chocolate store. That's more of a traditional business retail store. Are there different tax concerns for something that's more cutting edge than something that's been around for a longer period of time?
I find on the tech space, you have certain issues, for instance, in terms of getting financing. There's no traditional assets for a bank to attach to. Like really all you have is a good idea and the person that's there. Whereas banks usually want some sort of collateral if they're going to lend money to provide credit facilities. So that there's an inherent difficulty in obtaining credit finance, and that's why you have that whole VC area that you'd be familiar with in terms of providing those services. The other area that becomes particularly concerning on a tech startup is usually they're looking at that hockey stick growth. The tech guy is usually looking to grow pretty quick. So the $750,000 lifetime capital gains exemption and planning around the use of that becomes important. And then the other part that I typically see is in the tech space, with employees, with bringing key employees, there's usually not that much cash and people are in it for the home run at the back end. So there's often some sort of equity compensation arrangement where your employees, you're paying them with shares in your company, which doesn't usually happen in a more traditional business.
Can you speak a little bit more about capital gains exemptions, and we'll go into expenses and all that kind of stuff coming up as well, and what a write-off is, because oftentimes you hear when someone's starting a company, what's sort of like, well, I'm going to write this off, but I don't think they really know necessarily what it means. So we're going to explore that shortly. But briefly, what's capital gains exemptions?
Yeah, so every taxpayer has a $750,000 lifetime capital gains exemption, which means if, as a Canadian, you sell shares of what's called a qualifying small business corporation, it's all very technical, you're entitled that the first $750,000 of capital gains, you don't have to pay any tax on it, right? So you have one, your mom would have one, the person walking down the street would have one, if you have a kid, they have one. So there's a lot of tax shelter available.
And it's like a house, when you're getting a house and there's capital gains for that, it's sort of the difference between when you purchased it and when you then sell it, correct?
Right.
Well, we're going to be taking a quick break and we're going to be answering your questions live after the break. You can call us at 416-446-7090. You can tweet us at Toronto Speaks or Facebook us at facebook.com/Toronto Speaks or email us at torontospeaks@rci.rogers.com. But don't go anywhere. There's lots more to come when we come back here on Toronto Speaks Entrepreneurship. And welcome back to Toronto Speaks Entrepreneurship. Tonight I am joined by Andrew Wall, who's a certified management accountant, Vice President of Operations of CA4IT.com, and Wave Pro Advisor for Wave Accounting, and Jason Safar, who's also a chartered accountant and a partner in the tax services group at PricewaterhouseCoopers. They're here answering your questions about accounting and taxes for your business. So if you've started a business or if you've ever thought of starting a business, now's that time to ask. If you've got any questions, you can call us. Our phone number is 416-446-7090. You can also tweet us your questions at Toronto Speaks, or you can also send us a message on Facebook at facebook.com/Toronto Speaks. There's no excuse not to get in touch with us. So right before the break, we were talking about if you have capital gains expenses, and I want to get a bit more, what is an expense by tax? From what I understand, it's a whole bunch of different things. You can depending on what kind of accountant you have or what style of accounting you do, that you can change what an expense could necessarily mean and or something that you'd write off. But, sorry, go ahead.
No, go ahead, Ed.
Well, it's really somewhat of a gray area, deductible expenses, because a lot of people expect it to sort of be black and white, like it's in the income tax. This is what you can deduct for advertising. This is what you can deduct for your automobile. And there are some general categories that can give you an idea, but basically it has to be a reasonable expense related to your business type that will help your business to earn income sometime in the future. And that's nebulous and open to a lot of interpretation. So obviously a good accountant's there to help you understand that interpretation and give you all the options from conservative to aggressive and everywhere in between, and help you to have an educated understanding of where you fit on that spectrum and how that's going to affect your actual taxes. So there's a lot of categories that people know about right off the top of their head, like automobile expenses, potentially home office expenses, but there's a whole bunch of other categories like potentially meals and entertainment that they may not realize that they can deduct, and that's where a good accountant's going to come in and help you realize what you can deduct and maximize those tax deductions, because a dollar you deduct is a dollar you don't pay tax on. Pretty much everything else in Canada you do pay taxes on.
Yeah, I think that's a good summary. I always say to my clients, if you're comfortable sitting across the table from somebody from the Canada Revenue Agency and explaining to them why that amount that you paid helped you earn income from your business, then that's an expense you can deduct. If you're not comfortable saying that, then that's not an expense you can deduct.
And what's the difference between a write-off and an expense? Is there any?
No, not really.
It's the exact same thing.
Yeah.
For sure. Now, you've started up your new company. When does it pay to have a bookkeeper, and when does it pay to have an accountant? And then the second follow-up question to that is, when does it pay not to have your bookkeeper writing off different expenses that almost don't make sense just because you want to try and claim the most in the meal category, for instance, or something along those lines?
Well, we deal with really small businesses. Our average client's about $130,000 in revenue, and some even smaller than that. So when they come to us, they're usually mom and pop and bootstrapped. So they're usually have their wife or themselves doing a lot of the bookkeeping because cost is a factor. It's great if you can have someone who can come in and do that bookkeeping, but at $50 an hour or whatever you might pay for a bookkeeper, it can be prohibitively expensive for these startup type of entrepreneurs. So a lot of times it's the owner manager or their wife who's doing the bookkeeping, and the best that they can do is use tools like Wave Accounting that really simplify it and get the information into an organized format that a professional can then review. So like I said earlier, we do a benchmarking analysis, and we can then go through those categories and look for variances from the average and the median to see if maybe there's some areas where they've made mistakes or there's opportunities for improvement.
And can you tell us a bit more about Wave Accounting and what Wave Accounting actually does? You're a pro at Wave.
Yeah, and I'm a huge fan. I think it's a great product.
How did you get involved with it, first of all?
Well, it was my stepbrother actually who has been working with them, and he told me about it. And at first I'm like, okay, it's a web-based accounting product. What's different from this versus QuickBooks? Didn't really get it until I got my hands on it, and the simplicity of it is really what makes it special.
Well, I came across it a little while ago, and the interesting part was that it's a Canadian startup.
Yeah.
And it's free, and the way that their revenue model works, from what I understand, is they like to, since you're an entrepreneur and that's a captive market, they send you things that entrepreneurs need, and they make their money that way, where the actual financial accounting and the bookkeeping part of it is all free. It's a free service as of right now, and it beautifully integrates with your bank account. So you link your bank account in, and it automatically does kind of your bookkeeping for you, and you just kind of drag and drop where it needs to go.
Exactly.
So we're going to pull it up, I believe, on the screen, and maybe you could just quickly walk us through how the bookkeeping side of things works with Wave Accounting. On the main page, I know you log in, and once you get inside there, that's the income area of the site.
So what you'll see on here, and one of the things I think is really great, is that there's both a personal and a business side. So we've got this JX4 Digital, which is the company side. And on the personal side, I think one of the areas that a lot of entrepreneurs miss out on is capturing all the non-deductible expenses, because any money that comes out of your corporation that isn't for deductible expenses is pretty much going to become your salary. I mean, there's a whole bunch of complex rules that go into it, but it's basically going to become your salary. And
so there you've got a pie chart of what the different expenses are on your personal side of things.
So you can understand where you're spending your money, and it's not necessarily meant to curtail or budget your spending, but to help you understand where the money is going. Because if you realize that you're spending a whole bunch of money going out to bars or to restaurants, maybe there's a potential that some of that's legitimately deductible. And when you find out that you've got large areas in whatever the category might be, it helps you to really drill down and find out whether there's some potential for deductibility.
And if we go back up to the top there and we click on the business area for the J4 right up there.
Yeah.
Okay. So there are different businesses that you can select, I believe.
Exactly. And then what really drives this is where you can see the uncategorized and the preliminary documents, that it's based on your previous categorization. So what it's done is it pulled in your information from your bank statement. So it's eliminated all the data entry that's necessary normally with other products. And now it says, okay, where should I put this? What classification
does it go into?
Yeah,
so,
whether that be personal or business.
So if we click on a month, like in the graph there, it shows you month by month. So it's really great for bookkeeping.
Yeah,
and showing your different entries. So you've got your different places where you can enter in whatever kind of expense there is, and there's ones that are categorized or not categorized for a later date.
Exactly, and the categorized, so that's going in, and that's a write-off or an expense. And the ones that are uncategorized, it needs you to tell it, where does this go? Is this advertising? Is this business promotion? Is this home office? Is this automobile? And then once you tell it what category it goes into, it will then do its best to auto-categorize in the future, so that all you have to then do is come in and approve it. So this really reduces the amount of time that can typically be spent doing bookkeeping. And a lot of people sort of get this wall up when it comes to taxes, and they sort of shut down and defer, and it gets left to the last minute, and then they're late, and that's the worst thing you can do with
Can we click on reports for a second at the top? I think there's an area there. And what kind of reports does this crank out? And this is something that you'd pass off to your accountant for end of year financial, for
exactly.
a brand new startup type of thing?
So at the end of the year, you're going to want to send a balance sheet and an income statement over to your accountant, along with probably the general ledger, which is the full detail. And then you might use other reports in there, like the payroll and the accounts payable and accounts receivable ledgers, to manage the business on a sort of month-to-month. But obviously, these are all the typical accountants that typical reports that we're going to want to see as accountants at the end of the year. So it gives us all the things that we expect as accountants, but really simplifies the process so that people who don't necessarily understand debits and credits can use it.
Now, okay, so we're coming back into the studio here with questions coming up in a sec. We're taking your questions if you call in right now. But what accounts do you need to open when you're opening a small business? So on your ledger, you've got your meal expenses. Do you need subcategories for that? How do people know what to create for accounts, or is that something an accountant should be doing? What's your recommendations for that?
I'll defer to Andrew on that one.
For us, we actually provide a standard chart of accounts, and again, this helps us with our benchmarking analysis so that we can sort of make sure that every client, we can compare them against a standard. So usually if you have a good accountant, they're going to give you a set of chart of accounts that they want you to work with. If not, then there are some great tools that you can go to. Like there's a small business guide that's on the CRA website, which can give you an outline of some of the categories that you would typically expect, like automobile, home office, advertising, business promotion, telephone, all the sort of standard expenses, books and periodicals.
The general ledger on the demo here is up as well. So there's all different sorts of accounts. And when do you need to be more specific? Is there a time that you need to be more specific about, like, as opposed to if something isn't the exact category title of what you're putting it in? Should you be creating a subcategory?
Well, there's tax reporting and there's internal reporting.
Okay.
So for tax reporting, they're looking for really these high-level categories. For personal monitoring and internal tools, it depends on the nature of your business and what things you want to monitor and manage. So you're looking for key performance indicators. So when you're managing your business, what are your key performance indicators and what are the things you want to monitor and measure so that your business can be successful? And that's where you're going to get into the granularity.
And Jason, for PricewaterhouseCoopers, how long have you been with the company?
20 years.
And what is the scope of the things that PwC does?
Well, we're pretty broad, so from soup to nuts. So you got your general 3 broad categories. You got tax, you got assurance services, which are audit level opinion, review level opinion, notice to reader. Those are the 3 levels of assurance an accountant can provide on financial statements. And then you have everything else, which we call our consulting and deals practice, which is about kind of mergers and acquisition services where you help businesses buy and sell, obtaining financing from banks, and consulting process improvement, cost reduction, supply chain management, a whole raft of stuff.
Right, very interesting. And we've got a question via email, which will be our first question of the night, and you're still welcome to call in. We're looking for your calls. And the email question is going to pop up right here. It is from Parza, and what are some things to keep in mind when you are beginning a startup? So we've covered some of them. What are other aspects? So it's day one of you've just opened your own company. You've got this beautiful piece of paper that says you're now an entrepreneur.
Right.
What's the first step of setting up the books and going out, and what should people do? This is the part where people are lost.
So I'd say that the first step is figuring out your form of organization, whether you're talking sole proprietorship, partnership, or incorporation, because there's different advantages of each, and I think you've even had a whole show on some of those things because it's a large topic.
And it's available on Rogers Anyplace TV. So I'm telling you, if you go online, you can register for your account and watch episode 2. And we had some legal advice from Stacey from Siskins and Catherine from Enterprise Toronto who spoke about that. So you've got your different types: sole proprietorship, partnerships, corporation, not-for-profit.
Yeah.
Okay.
So then once you've picked your legal structure, you're going to have to figure out what your bookkeeping method is to get your information organized. You're going to want to make sure that you have all your appropriate accounts set up with CRA. So you're going to probably want potentially a payroll account number, potentially a corporate business number, and an HST number. And once you break $30,000, you're required to set up an HST number.
Now that's a weird topic because you've got this 30,000 area where if you're making less than 30,000, especially for a sole proprietorship, you don't need an HST number. Is that correct? Because they merged. I remember it from the GST, HST, or GST, PST days. But is that how it's now working with the HST?
That's correct. But what we actually recommend, it's usually beneficial to opt into it, because what a lot of small business owners don't realize is that they can actually make money from HST. Because with the quick method of HST, there's a calculation that's basically 7.8% of the first 30,000, 8.8% of everything over and above that, and that's how much you pay to the government. The rest, the difference between 13% and that 7.8% or that 8.8%, is there as sundry income for the corporation.
Really?
So the small business owners actually make money off HST. So there's a reason sometimes to opt into HST even before you're required to.
It also makes your company look a little bit more professional because it's standard practice to be charging HST, and then you don't find yourself in a position once you've broken that $30,000 a year mark. It is a year, correct?
Yes.
Yes. Yeah. That you don't have any issues when that time comes either.
Yeah, because it's not great to have to go back to your client and say, I'm sorry, I forgot to collect this HST. Can I recover it now?
And there's also a $4 limit for small business transactions. So if you're under $4, is that still applicable? Do you know, I'm creating stuff up. I'm creating up my own tax rules here this evening. But from what I was told is that for small items, often for bakeries, if you're under $4 or $4.50
for
food,
personal consumption? They won't charge it?
Yeah, so it's still a good idea to be charging this if you can as a business owner so you don't have that issue.
Well, my thought would be if you expect your business to be, successful, I guess it depends how you define success, but at some point, you'd probably want to register for HST. You're probably going to want to exceed that $30,000 sale mark. So why not do it early? Like,
Yeah.
why not get there, especially if there's an advantage to it? Get in, jump in, start working
Well,
on
we
it.
were just talking about those small food items and
Yeah.
personal consumption, and we were going from taxes over to chocolates. On today's business profile, I had the pleasure of finding out more about Swiss Master Chocolatier, and of course, I had the chance to taste a few of their amazing chocolates. So it's the holiday season and everyone wants that special gift. So we came by Swiss Master Chocolatier to find out a bit more about the business of chocolates. Let's go meet Ingrid, who's the owner and founder of Swiss Master Chocolatier and has been in business for over 27 years.
Swiss Master Chocolatier is one of a kind. We have the best chocolate this side of Switzerland, and it all comes in from Switzerland. Not only is the quality of the chocolate the best, but the service that you get from Swiss Master is unequaled. We have been at this location at York Mills and Bayview for the past 27 years. My father's side of the family has been in the chocolate business for the past 50 years in Switzerland, but when I started it, which was, as I said, 27 years ago, one of the main reasons was because I wanted to have some kind of a connection still with my homeland, and that's how that whole thing got started. The biggest challenge getting Swiss Master started or launched, as you asked, 27 years ago, the people here in Canada were not as educated with a top quality product such as what we carry, and so it took time for them to be introduced to it and also to realize what true good chocolate is all about. Retail is one of the most challenging but yet most rewarding businesses I think that there is, because you're catering directly to customers and you're interacting with people, which is a very beautiful thing. You get to know them, and I think that for me is one of the biggest benefits of being in the retail end of business.
What are some of the things that you could advise young entrepreneurs on?
Be honest, be fair. Don't try to just make a fast buck, because that's not what it's all about. In order to stay in business, you have to be competitive. You have to make sure that the product that you offer is always top, and always give the best service possible.
What is one thing that you couldn't have prepared yourself for in business?
The amount of work that it entails, because as an entrepreneur, even in retail, it doesn't stop when you close the shop. It still continues on. So there is a lot of work, but if you are prepared to work hard, then it is very rewarding.
Ingrid, so this is the part I've been waiting for the whole interview. I wanted to try one of your chocolates. So what's the best one that you could recommend, or how would you recommend a chocolate for me?
Do you prefer milk chocolate or dark chocolate or alcohol or nuts?
I think I'm more of a milk chocolate kind of guy for right now. The alcohol sounds very appealing, but not for this segment. We'll save that for another one, yeah.
Okay.
So what do you recommend?
I would recommend the dome truffle.
Okay, so
It is absolutely wonderful. Now, what the dome truffle is it's a crème brûlée filling.
Perfect.
And the top is very crunchy, so as you bite into it, it really blends in nicely. And then the bottom is encased in milk chocolate.
It's really good. Thanks so much, Ingrid. So to find out more about Swiss Master Chocolatier, you can visit the store here at 2538 Bayview Avenue, or go online to swissmaster.com. And I'm still eating chocolates in the studio. It's really delicious, I gotta say. Thank you so much to Ingrid. Now I'm chewing with my mouth full. So we gotta go back to tax talk, but thanks to everyone at Swiss Master Chocolatier. And definitely go check out these. Wow, these are really good. I'm just in shock. So going back to taxes and accounting, what got you into this? Like, I know a lot of people are sitting at home right now and they're on their couch and they're like, why would you get into taxes and accounting? Is it, there are definitely more interesting topics when it comes to business, perhaps.
Yeah.
What excites you, or what interests you, and why are you passionate about this topic?
Well, for me, I didn't come into accounting through the sort of normal route where a lot of people sort of said right out of university they wanted to do accounting. I have a family business. My father's been in accounting since 1984, and I started working with him in sort of the technology side and helping him develop a software and an application, and sort of found my love for it through there. And working with these small business owners, like I said, our clients are really owner-managed businesses, and seeing the ability to help these guys manage their businesses, help them to succeed and to grow, can be really rewarding. And when you can help someone with their taxes, and you can help someone with their financial planning, and you can help them to build an ongoing career that helps them and helps their employees, is rewarding.
And I was also wondering, for CA for IT.com, we didn't even touch on that. I know you consult with Wave Accounting, and you're a Wave advisor. What is CA for IT?
So CA for IT stands for Chartered Accountants for Information Technologists.
Okay.
Founded in 1984 by my father, George Wall. And it was focused really around IT consultants, because back in the early 80s, most IT consulting was in-house sort of MIS services. And my father came up with this concept that was not really well adopted in the industry with the big four firms, that basically said these owner-managed businesses, these independent contractors, were eligible for the small business deduction. That strategy over the years has become accepted by the big four firms, and has really sort of cemented my father and our business in the IT industry, and has allowed us to branch out into these entrepreneurs, which is our passion. Because the IT business has been tremendously rewarding and successful, and built a core business that we've built our business around, and given us the opportunity to work with these entrepreneurs who are really, a lot of them are really grassroots, don't have a lot of money, don't have the money to hire a business coach, don't have the money to hire a full-fledged accounting service. So my dad, what he does is he gives away all of his time, which is really unique to see in the accounting world.
Definitely.
And he doesn't charge his clients for any of the time that he spends, and we just sort of consider it giving it back to the community. Because in the reality is, the more time he spends with people, the more referrals that we're getting, and the more our business grows. Mm-hmm. So it's actually, well, he doesn't get paid for it directly, it's been paid for 10 times in the referrals.
Definitely. And Jason, why did you get into this?
Yeah, that's a funny story. My parents are immigrants, and so growing up.
Where'd they come from, out of curiosity?
My dad's Hungarian, my mom's German.
Okay.
Eastern Europe. So growing up in my house, there were really only 5 jobs that I was ever aware of, outside of, postman, fireman, garbage man, anybody with man on the end who came by your house. It was lawyer, doctor, accountant, teacher, or engineer. Mm-hmm. I didn't want to be a doctor, I didn't want to be a lawyer, I didn't want to be an engineer, I didn't want to be a teacher, wound up in accounting.
Process of elimination.
Process of elimination, but glad I did it. It's a great field. What you really learn as you get into it is you can pretty much do anything. It's just a good base for launching a career. It's good knowledge to have in any type of business you're going to operate in. Understanding financial information is very important, and the accounting training gives you that ability to do that, right? So it's a good base for anything you do.
And everyone hates audits. So I wanted to touch on this, and we've got a caller, Jen, who's from North York. Jen, what's your question to our panel?
Hi there. My question is, how do you handle and avoid an audit?
That's a okay.
Two-pronged question.
Yeah. So
there's no way to avoid an audit. People like to say, beware of red flags or things of that nature with Canada Revenue Agency. Of course, if you do something egregious, maybe you're inviting somebody to audit you. But I think you can go on the assumption that if you're a private business and you're starting up, sometime in your startup period, if you're making money, somebody from Revenue Canada is going to come and see and make sure you know what you're doing.
And what are those red flags that people should look out for?
Well, red flags, like I said, I think they're overplayed. It's more about doing something completely, crazy. And maybe not completely crazy would be, a good example would be, for a while, there were a lot of schemes out there that the CRA were investigating. For instance, art flips were something that was done maybe 5 years ago, where somebody would buy artwork at a low cost and then donate it at a much higher value and claim a massive donation credit. So you have this taxpayer who goes along year by year by year, and then all of a sudden $100,000 donation credit, and then
So your kid in kindergarten, it draws a painting, and then it's worth $2 million. Like,
yeah,
I understand with YouTube that things are getting popular these days very quickly.
It wasn't quite on that stage. I mean, there was some legitimacy to it, but it's that all of a sudden, out of the blue, some major change in what you're doing. You expect kind of a progression, a growth. So if there's any red flags, it's that all of a sudden doing something completely different from your tax history. But I don't think you can really, for the most part, avoid an audit. If they're going to come, they're going to come. So the key is to be prepared for one, which is about keeping your books and records and being able to justify anything that you filed. Okay, well, thanks, Jen. We really appreciate your call. How do you handle that audit when you, so now you're in the audit stage and you've got this Canada Revenue Agency knocking on your door. What are the steps that you take, and what do you do at this stage? You mean after panic? Yeah, well, I'm sure. Okay, so that's the first stage. First stage is panic. So most people panic off the top. After you get through that, what's the next thing to do? What's the next emotion? I always say the best thing to do is open lines of communication. A lot of times when people have an audit, they shut down, they turtle, they get scared, and really the person from the Canada Revenue Agency is really just trying to do a check to make sure you know what you're doing. They're not so much coming after you because they expect that you got suitcases full of money somewhere that you're hiding. Yes. It's more about just trying to make sure that you're complying with the tax system. So it's about opening communication and starting a dialogue on what is it that they're looking for, and then finding that support and showing it to them. Okay, Yeah, I think you're right. Dialogue is key, but I think also my opinion is you got to have a professional help you to understand the language and making sure that you're communicating properly, because it's easy to put your foot in your mouth and say something that you shouldn't. So you're right. Most of it is they're just trying to do their job, collect information. They're not these evil people with horns on their head that everyone thinks they are. They are people just like you and I who are trying to look for people who are being fraudulent, and most people who are filing their taxes aren't being fraudulent. They're not hiding income. But making sure that you've got the documentation in place so that you can defend everything properly. So standard practice, if I'm not mistaken, 7 years you have to hold on to documents for? It's actually 6 years. Six. Yeah. I just like to make sure I'm over confident. I'm your A student right there. Yeah. And once you've got quick question, personal question. If you have a sole proprietorship and you've got, so sole proprietorship taxes, for anyone who's not aware, go through your personal taxes. It's like an extension of you, and as Stacey explained last episode, it's not a separate entity. It's you and the company are essentially the same. It's an operating as title. Yeah. For your corporation, that's totally separate. If you're getting a personal audit and you own a sole proprietorship, is your company, the sole proprietorship, now being audited as well? Yes, but also keep in mind that there's different types of audits. There's HST audits, there's general audits, there is, if you're a corporation, potentially a payroll audit. So they're not necessarily all intertwined, but they can be, because sometimes they'll come in under a payroll audit and initiate a general audit because the lines of communication haven't been there, or they're concerned about some of the information that they found when they got there. Very interesting. Okay, so we've got another question via email, which we're about to go to. And you're still welcome to call in at 416-446-7090. What is a mistake that entrepreneurs tend to make with tax planning? Yeah, that is actually a very good question. I think maybe it's the failure to plan. It's trying to plan retroactively. So it comes the end of the year and you just try and figure out what just happened last year and what should I call everything that I did. It's not the best way to go about it. You're a bit better off if at the beginning of the year you kind of think, what do I think's going to happen this year, and what's a strategy for dealing with it, and then adjust that strategy as you go throughout the year. So it's retroactive tax planning that and also the Canada Revenue Agency really frowns on that. So in terms of quality, plan early, plan is really what's the failure? The failure is to plan. That makes sense.
you have anything to add to that?
Yeah, I think, like you said, it's planning and understanding the implications of your actions. Because like I said, people sort of shut down when it comes to tax and not realizing if you are incorporated and you're pulling money out from your corporate bank account into your personal bank account, that has implications. Some people don't understand that.
And can you go a little bit more into that? So I know if you've got a sole proprietorship, I know this, but for people who are home starting their own company, if you incorporate your company, it's definitely not the same as a sole proprietorship. A sole proprietorship, you and your company are pretty much one and the same, and you can move things around. You've got more flexibility. Whereas if you're incorporated, it's a strict no-no. What are the differences with that? Is that accurate, what I just said?
Yeah, well, so a corporation is a separate legal entity.
Yeah.
And really the advantage from having a corporation is having the ability to leave money inside the corporation and have it taxed, ideally at the small business tax rate of 15.5% here in Ontario, versus the personal tax rates, which can be as high as potentially 46%. So the objective is to leave as much money inside your corporation as possible, but the problem is if you're taking money out, like I said, and putting it into a personal savings account, that has implications. And there's this thing that's called the director's advance, which most entrepreneurs don't get, at least in their first few years of being a small business owner. And basically that's the net of all the money that you pulled out of the corporation, less your salary or your dividends and the expenses you've been able to deduct.
And we're going to have to pick up on that in 1 second. We're going to go to a quick segment and to a break coming up. Is golfing an expense, really quick?
Actually, you know what? This is one of the things that's specifically disallowed.
Really? You can't go...
You can't, your golf green fees are specifically disallowed. However, drinks on the golf course are deductible.
Well, my golfing experience has gone a lot better thanks to Andre Courier over at Golftown. And this week we're going to take a look at what Andre and I worked on. It's our grip. Today at Golftown Etobicoke, and I'm joined by Andre Courier, who is the Director of Academies and Services for Golftown. So what are we learning today?
Well, we set up a curriculum after last week's interview, so today what we're going to talk about is the grip. Grip essentially is how it's going to influence the club face arriving at impact.
Okay.
So what I like to do is just see how people normally hold it in their comfortable position. And then we also have some training aids that we use at Golftown to help you understand the importance of the grip. So you're going to place your hands here, your left hand correctly. Now you notice the V of your left hand and the V of your right hand are parallel, pointing towards the side of your shoulder. Now everybody's individually built similar or differently, but it will give you a good reference point to start with. Perfect. Now we place the golf club in your hand, try and simulate those same V's pointing to the right side of your body, and then go practice.
Perfect. Well, thank you so much for your time. And what are we going to explore next week?
Next week, we'll start talking about posture. Now we know how to hold it. We'll talk about posture.
Okay, fantastic. Thank you so much. And we will be back here at Golftown Etobicoke on our next episode. And welcome back to Toronto Speaks Entrepreneurship. Tonight I'm joined by Jason Safar, who's a chartered accountant and partner in the tax services group at Waterhouse, and Andrew Wall. Andrew Wall is a certified management accountant, vice president of operations of CA for IT.com, and Wave Pro advisor for Wave Accounting. And it's his birthday today. Just found that out as well. So happy birthday.
Thank you.
They're here to answer your questions about accounting and taxes for your business. So if you've started a business, or if you've ever thought of starting a business, or if you still have a question because you're scared of taxes, now's that time to ask it. The phone number to call is 416-446-7090. You can also tweet us your questions at Toronto Speaks, or you can also send us a Facebook message at facebook.com/Toronto Speaks. We're back. There are some fears still, and there's certain things that we were talking about as being expenses or not being expenses, and I learned some stuff about golfing. Can we go into that briefly?
Sure.
Okay, so for golf expenses, I just found out during our golf segment that it pays more to have your friends pay for the green fees, but for you to take on the meal expense and or drinks afterwards, and that cigars are possibly fully, is that, yeah, okay.
Possibly.
So I'm sending this over. If you've got questions about what's exempt, you're welcome to send them in as well. So for golfing, since golfing is very important as an entrepreneurial activity, what's covered, what's not?
So the golf green fees are not. They're specifically disallowed by the Income Tax Act. There's not many things that are black and white. That is certainly one of the areas that is black and white. You cannot deduct your golf green fees no matter who you're golfing with, no matter how much business you're actually driving out of it. Now on the other side, the meals and entertainment at the 18th hole or 19th hole, as well as the drinks that you might have while you're out networking and building relationships is potentially deductible. And again, it's still got to meet that basic criteria. Is it related to the business? Does it help your income to earn or help your business to earn income in the future? But if it meets those criteria, then it's legitimately deductible. So like you said, if your friends are picking up the green fees and you're picking up the drinks and entertainment and you're helping to build your business, there's a deductible expense for you.
That's fantastic. And Jason, can you tell us a bit about your practice and what you actually do at PwC?
Yeah. So my specific practice is I work with tax with private business owners. So I do all of their tax planning for the family, the business, personally, and try and integrate that whole family wealth picture into their structure.
And for savings as a new business owner, when should you save? Are there percentages, or is there a certain template that you should or shouldn't follow?
Yeah, it's kind of hard not to spend everything you make.
Right off the top, isn't it?
It's kind of hard not to.
Cash flow issues.
Yeah. So and especially starting up a business, if the one thing that most startup businesses need is capital, right? So they have a lot of expenses. So it's a difficult thing. Save as much as you can is really your starting point. Is there a percentage? No, not really. There's not any, this is the magic number.
When you approach investors or venture capitalists or a bank for money, what are they looking for?
They're looking for a good business plan. What's interesting right now is banks want to lend money. We're in a market right now where there is a lot of capital in the banking system. They want to lend money. What they're looking for are good ideas, good businesses, and good people running those businesses.
And I see a lot of horrible ideas. As far as I'm concerned, I just think they're nothing special. And every once in a while, you get something that's very interesting. What do you define as a good business from a banking perspective, or something that's innovative? Like, what's a good idea for a bank?
Yeah, I guess it would be the same thing as a good idea for any person. Something that you could see that, there's a market for that. Okay. You're going to be able to sell that, and you're going to be able to make a profit off of that. Do
niche markets add points or take away from an idea?
Depends on the idea. I think niche markets, for the most part, it's easier to wrap your hands around what exactly you're trying to do, but it depends on the size of that niche market. Like if you're catering to Swiss left-handed watchmakers, who operate from January to March, that's a little bit too niche, right?
Yeah.
Nobody's going to be that interested.
Although I have a great friend, and I'm not going to mention. Well, I don't know if I should mention this idea. It's nothing crazy.
So about Swiss left-handed watchmaker?
I keep watching him. All he does is go to different hot tubs around the world, and I swear if he started a blog about different hot tubs, there's a market for that. And it could be a top blog site. We all like to relax, right? We've got another question from Facebook for you, and that question is popping up here. It says from Jeff, how would you go about evading taxes by putting money in tax havens outside of Canada? That's one of those restricted topics.
That's a live wire.
Yeah, it is, right? We're all getting into trouble.
Fine line between tax evasion.
We've actually got a back door in the studio here, and that's the entrance.
First of all, you shouldn't send out any electronic communication with the word evading taxes
and tax havens,
if you're trying to plan. Yeah. The reality is, it is a pretty technical area, and actually recent rules have come out on investing in tax havens. The bottom line is, if you live in Canada and you stick money in a tax haven, you're going to be taxed on that money in Canada. The only way you really can do it is by leaving the country. So there is no kind of secret society of tax planning where you take this money and you can just stick it over there and still live here in Canada and enjoy it. You really do have to move, or you have to give it away to somebody else.
Huh, that's it.
Yeah, and if you move too, there's departure taxes too. There's implications of leaving the country for tax purposes that a lot of people aren't aware of. So they're just like, I'll just go offshore, take my money and run. And it's really not that simple.
When does it pay though to legitimately open up a a holding company that's formatted in one purpose, and like when is just enough? And if you, like for me, I almost would rather just do things the simple way as opposed to having 14 companies layered for tax purposes. So when do you make that choice?
A lot of that is there's a cost benefit rule, and you can calculate it financially pretty clearly. What you can't calculate is what you were just indicating, which is, as a business owner, how complex do you want to make this area? There's a certain amount of shoe leather, of complexity that maybe I don't want to engage in. Maybe I just want to focus on my business, and I'm all right paying taxes. Like, yeah, you say by doing this I'm going to save $50,000, but maybe the amount of effort that it takes to do that isn't worth it to me, right? So I think there's definitely a financial cost benefit that's easy to see which side you fall on, but the other side of it is, how complex do you want to make your life?
And quickly, we just have a minute until we go to Andy, who's doing our tech segment, but when do you choose a bookkeeper versus an accountant?
So a bookkeeper is really going to help get the information organized and ready for an accountant. And like I said, with a lot of these startup guys, it's probably their wife or themselves that's going to be the bookkeeper. If you're a larger organization, you're now a little bit more established, and you want to free up your time so you can concentrate on building your business or working on your business instead of in your business, then you're going to look to hire a bookkeeper to prepare that information so that your accountant can make the tax decisions based on that financial information. And I think one thing that's important to remember is that financial information, income statements, and balance sheets are not just for tax. They're to help your business understand where it is, understand its key performance indicators, and help you manage your business effectively. And some people lose sight of that for the focus of compliance.
Yeah, for sure. Well, we're going to learn a little bit about some more technical, entrepreneurial things. Our resident tech expert, Andy Walker, is about to join us with what's trending right now for entrepreneurs in the tech world. Andy, with the holiday season approaching, what should entrepreneurs be looking for?
Thanks, Evan. If your business has a website, then you have what's called a domain name. That's a .com or a .ca web address used to call up your website. Mine, for example, is cyberwalkermedia.com. Getting one is easy. You can sign up on any one of hundreds of websites that sell them. But when you need to do anything with your domain name, you need a techie. Navigating domain name controls on some sites can be kind of scary and really confusing. And if you're not careful, one wrong move can disconnect the name from your website. That's why I like hover.com. This Toronto-based site is probably the easiest domain registration site I've ever used. You can register .coms, .cas, as well as some of the newer domains like .info, .tv, .pro, among many others. When you first visit the site, you'll notice how easy it is to use. All the controls are easy to access, and all your domains and related services are in one place. It's uncluttered and straightforward. Hover does not provide you with a web server to host your website, though. That's left to other companies. But they will handle your email for you, and the email service they offer is very robust. One of the best features on the site is the ability to create web shortcuts. You can take a long web address, like the one on Google Maps, and save it as a short web address on a web domain that you own. And you can reuse that and remember it easily. The best feature at hover.com, however, is when you call them. They have an unusual no-hold policy. So you dial, the phone rings, and a real person in Toronto picks up the call to help you out. It's quite extraordinary. No one in the domains business does that, and few companies besides Hover do that in the tech industry at large. You pay $15 a year for your domains at Hover, and that's probably more than you would some other sites. But frankly, it's worth it with all the value-add services and help. Check them out at hover.com. I'm Andy Walker, and you can find out more about me at cyberwalkermedia.com. Back to you, Evan.
We've got a caller right now, John, on the line from North York. John, what's your question?
Yes, I was just had some questions. I was interested in opening up a food bank, soup kitchen for the needy, and I was just wondering about the implications of the taxes when it comes around to, say, renting a building or something, or would it be better just to go under a already registered ministry like a church or something like that?
Jason, you want?
Yeah, it's generally easier if you do companion up with somebody who is already taking care of all the structural aspects, especially for something like you're speaking of, which is a grassroots, smaller level venture. in general, what you got to look at is whether or not you want to be a not-for-profit or a charitable organization.
Is that from the taxable standpoint
Yes.
or from the registration? I just started
It's kind of both. It's kind of both. So a charitable organization is something that will be able to give receipts to donors. Not-for-profit is simply that. It's an entity that's basically being run with the desire to not make any money, but not lose money.
And John, I hope that helps answer your question. We're running out of time right now. So first of all, I really want to thank you both for being on the show. Happy birthday, first of all. It's been great having you both here. And again, to find out more about your companies,
ca4it.com is the best place to reach us.
Perfect. And then also we were talking about Wave Accounting earlier as well. So waveaccounting.com.
Yeah, waveaccounting.com.
Perfect. And for PricewaterhouseCooper and how do you find
PricewaterhouseCoopers, PwC, type it in anywhere, we'll pop up.
That's fantastic. And I assume that if people want to reach out to you, they can hire your services, correct?
Definitely.
Absolutely.
And you guys are just continuing on throughout the year. When's the busiest time of the season for you? Right before tax season, I assume? And
well, we start ramping up now. T4s begin January, February. Then after T4s, we're into personal taxes.
So they got to catch you right before that.
Catch us now.
For more information on tonight's guests, you can visit rogerstv.com and look for Toronto Speaks Entrepreneurship. And again, while you're there, be sure to check out our contest for your chance to win a head-to-toe business makeover courtesy of Got Style, valued at $1,000. So go create your business. And on behalf of the team here at Rogers, I'm Evan Kosiner, and thank you so much for joining us tonight.